Today, put another investment loan on the Barbie. Hello again, it's Martin North from Digital Finance Analytics. Welcome to this post covering finance and property news with a distinctively Australian flavour. Well, the ABS released their housing finance data today. This is the new loan data. And the most significant turn of events is that new investor housing loan commitments rose 6.1% to another record high of $11 billion. That's seasonally adjusted in January 2022. The ABS said the value of new loan commitments for investor housing has grown for 15 consecutive months, consistent with the strong housing market and growth in house prices. Despite record investor loan commitments, though, the share of investor lending to all new housing loan commitments was around 1/3. This reflects the rapid growth of owner-occupier commitments over the past 18 months. The rise in investor loan commitments was driven by New South Wales, up 9.8%, Victoria, up 11.1%, and the ACT, up 22.8%. Queensland fell slightly, down 1.7%, but remains at historically elevated levels. Now, of course, the point here is that APRA quite recently said they weren't too worried about lending growth because it was all owner-occupier land. Well, that story is now changing, and it seems to me that we're getting into a trap now where effectively credit is being driven by investors at a time when property prices are way too high, interest rates are very low and rising, and so the risks in the market are going through the roof. APRA, wake up. The value of new loan commitments for total housing rose 2.6% to a record high of $33.7 billion, and that was driven by the rise in investor loan commitments. The value of new owner-occupied loan commitments rose just 1% to $22.7 billion. The rise in owner-occupier loan commitments was driven by New South Wales, up 3.3%, Victoria, up 3.2%, and the ACT up 33.5%. A quick word on the ACT, of course, those are very small numbers, so they do bounce around a lot. The number of new loan commitments for owner-occupier first home buyers fell 6.9% in January. That was 32.6% lower compared to a year ago when first home buyer activity was near a record high. Falls in the number of owner-occupied first home buyer commitments were seen across almost all the states and territories, with Queensland down 16.1% and Western Australia down 8.1%. The ACT territory, though, recorded the only increase. That was up 25.7%, but again, very small numbers. Now, the point here, of course, is that first-time buyers are being displaced by property investors. That's absolutely clear. So once again, we see the structural problems with our housing market. At the national level, the average loan size for owner-occupied dwellings, which includes construction and the purchase of new and existing dwellings, rose $17,000 to another record high of $619,000 in January. So ever bigger loans when we're going to see interest rates rising ahead. How does that work? The ABS said that the strong rise in the average loan size for owner-occupied dwellings in January was due to an increase in the value of commitments and a largely unchanged number of new loan commitments. Well, that's stating the obvious. All states and territories rose to new highs except Tasmania and the Northern Territory. And in January 2022, in original terms, the value of new variable loan rate commitments funded in the month fell 17.1%, and the value of new fixed loan commitments funded in the month fell 34.2%. That's an important statistic because that is real loans funded rather than loans committed. One of the things that analysts don't get their head around is the difference between the two. Sure, you can get a loan commitment, but that doesn't necessarily mean that it follows through and is funded. So this is an important figure to watch. The commitments number doesn't tell us a lot. The funded number tells us a lot more. And just quickly, the value of new loan commitments for fixed-term personal finance rose 0.8%, that's season adjusted in January, and lending for the purchase of road vehicles rose 0.9%. Now, it's worth noting that there are still some shenanigans going on with these numbers. The ABS has firstly identified some inconsistencies in how buy now, pay later loan products are being reported, so they're working with APRA, the Reserve Bank and lenders to ensure that the reporting aligns with reporting guidance and definitions and is consistent across different lenders. So revisions to personal finance data are expected when this is resolved. And also, the threshold for housing finance reporting was recently reduced, resulting in a number of new entities reporting data for the first time. Now, that data has been excluded from lending indicators for the time being. It will be incorporated following analysis and quality assurance, and that, they say, may result in some revisions to housing finance series data. And separately, reporting improvements are also being made by some lenders, which will result in changes to the classification of owner-occupier versus investor loan commitments within the housing finance series. And the ABS is working with APRA and the lenders to understand the impacts and will implement revisions to those series when the reporting changes are applied in the coming months. And they say, due to the current impacts on loans funded in the month from these reporting changes, the first home buyer series for new and variable fixed rate loans funded in the month have not been shown, which is a pity because that's a very important series to watch. So the bottom line is this: investors are having a field day, despite the fact that it seems to me this is the wrong time to be piling into the market. First-time buyers are being squeezed. The average loan continues to rise in terms of its size, which puts more pressure on household finances, and we've still got some funnies in the numbers. So I'm not quite sure what we make of all that, other than to say it looks to me as though we're still having a bit of a party when it comes to borrowing for housing finance. Now, if you're buying your home in Sydney's contentious market, you don't need to stand alone. This is the time you need to have Edwin Almeida from Ribbon Property Consultants standing alongside you. Buying a property is both challenging and adversarial. The vendor has a professional on their side. Emotions run high, price discovery and price transparency are hard to find, and then there's the wasted time and financial investments that you make. Edwin understands your needs, so why not engage a licensed professional to stand alongside you? With RPC, you know you have experience, knowledge, and master negotiators looking after your best interests. So shoot Ribbon an email at info@ribbonproperty.com.au, and if you use the promo code DFAWTW/Martin, you can get a 10% discount offer. I'm Martin North from Digital Finance Analytics. Many thanks for watching, and I'll see you again next time.